Welcome to Six Figure Coaches with Luke Charlton, where every week we interview a successful coach and break down their business. We take you behind the scenes in their marketing, advertising, and sales campaigns. We show you what's working. We show you their frameworks, their proven strategies, so you can implement them in your business to grow. Now let's bring on this week's guest. Here is your host, Luke Charlton. Hey, this is Luke Charlton here, and welcome back to the Six Figure Coaches Show. Super excited to have you here, and I am very, very excited to bring on today's guest. I've been looking forward to this interview, and you will see why in just a few minutes. This coach I'm going to bring on, he has just an incredible story, an inspirational story, a story of hope, a story of success, and I cannot wait to bring him on in just one moment. Just before we do, remember, if you want to be promoted on the Six Figure Coaches Show, it's very simple. All you have to do is go to podcast.lukecharlton.com, go to podcast.lukecharlton.com. There's a few qualifying criteria there to get on the show, but if you qualify and you're a coach, then you could be promoted on this show. So if you want to know how you can get interviewed on the Six Figure Coaches Show with me and get promoted out to thousands of coaches, then just go to podcast.lukecharlton.com. Okay, so with that being said, let's get stuck into today's interview. So as I said, this coach that we're about to bring on has an incredible story, and that's I just wanted him to, when I heard his story, I was blown away, and I said, you know what, his name's Mike. I said, Mike, let's stop there. I'm going to bring you on, and we'll go through your whole story. So. And then we'll also go into his business model and how he's selling his coaching, etc. So let me bring on to the podcast Mike Morawski. Mike, welcome to today's welcome to the Six Figure Coaches Show. Super excited to have you here.
Yeah, I've been excited about this. I'm glad we finally got together. We connected a couple of times, and I'm excited to share. So.
I'm very excited. Well, I'm actually, one thing I didn't mention, part of Mike's experience is, you've been involved in over 285 million in real estate transactions. So you are a real estate coach. And that's kind of like where you're, if we wind back the clock, because I do want to start from the beginning of your story. So how about we just start right from the beginning and we just start there, and then that will lead us into where you are today, basically. So.
Yeah. Absolutely. Yeah. So been in real estate 30 years. And Luke, stop me wherever you need to.
Sure. Yeah, absolutely.
If you unpack something, please let me know. But
yeah,
been in real estate for 30 years. I started out, I was in the general contracting business, actually. And I, like any entrepreneur, I was involved in everything from sales and marketing and bookkeeping and hiring and firing, and still in the field banging nails as a carpenter.
Yeah.
Woke up one morning, looked at my wife at the time, and I said, I'm done. I can't do this anymore. I was just burnt out. I had grown a fairly large company outside of Chicago, and fortunately, I had somebody knocking on my door wanting to buy the business. So we decided to sell the company, and I took a year off. And Luke, again, like any entrepreneur, you never take time off. So
it's actually, it's funny we said that, Mike, because my dad's retired now, and we just went. He's traveling around Australia in his caravan, and we met up with him yesterday, and he's just kind of like just sitting there, kind of just having a couple of beers in the afternoon. I'm like, this is basically what he does each day. Just sits around, and I was there for like 5 minutes. I'm like, okay, let's do something, I cannot picture. Maybe when I've been doing this for like 40 years or something, 50 years, I'll get tired of it, because it is stressful being an entrepreneur, right? But I agree. I don't know. Maybe just where entrepreneurs were always built to keep moving. But anyway, I thought that was a funny observation. It's very relevant.
It's all in the vision, I guess.
Yeah.
So I during that time off, I took a year off. During that time off, my wife and I, we house hacked a couple of houses. And Luke, this is long before it was the sexy thing to do, right? So it was unheard of back then. But we lived in a unit and renovated the other one and moved into the next one. I'd heard Jim Rohn speak years ago, and Jim said, success leaves clues. And that always stuck with me. So along the way, I met a real estate agent who was really successful at what he did.
Hmm.
And I went to him and said, "Hey, I'm thinking about going in the business, and can you give me some suggestions?" And he said, "You know what? Let me make a cassette tape for you." So now this kind of dates myself, maybe from your dad there, but
Hey,
I don't think.
I used to have cassette tapes too.
Yeah, but I don't think we could find something to make one on today.
It's true.
But he made me this cassette tape, and I listened to it over and over and over again. I burned it out, and I put those fundamentals, those principles into play, and went in the real estate space. And as a real estate sales agent, in my first 9 months in the business, I sold 78 houses. I was Remax Rookie of the Year that year. I went on to build a team selling over 125 homes a year. And so I'm not somebody who sits back, right? I'm pretty aggressive and like to make things happen. Well, 2005 came around, and I saw the market starting to shift and soften, and I knew that things were going to be different, that I wouldn't be able to keep that production up, but I should probably go do something else. So what I had always wanted to be in the apartment business, in the multifamily business, because when I was in the construction business, I did some work for a couple of large syndicators in the Chicago market. And I understood this, and this is what syndication is. You find a great real estate deal, you go out and raise capital from private investors, you put the two together, and you operate it and run that business. And as long as everything goes well, everybody does well. Well, in 2005, I syndicated my first apartment deal. And from there, I went on and I bought $60 million worth of real estate. I raised $18 million. It was like 4,000 apartments in 5 U.S. markets.
Yep.
Plus, I vertically integrated a property management company managing about 7,500 units. Wow. Did that all in about 30 months. I built a $100 million company. Had built this team, had a large organization, and 2008 came around. And we all know what happened in 2008, worst economic crisis the world's ever seen. And I'm thinking this whole time, this is just going to be a recession. It's going to last 17 or 18 months. We'll cycle through this. Might have a 10 or 12% correction in the marketplace, but this thing lasted 7 or 8 years with a 40% correction. What I did was I had about 38 different companies at the time, and I had a few that were in bad trouble and were really bleeding cash. And I thought, well, let me try and save all my investors. I didn't want anybody to get hurt, when in reality, what I should have done was let some of those companies just go to foreclosure, let a handful of investors get hurt, but I tried to save everybody. So I decided to start moving money back and forth between companies. So I would take money from profitable running companies, put it in non-profitable to kind of shore it up at the end of the month.
Yeah.
My accountant and my attorney both said it was okay to do that. Just leave a paper trail when the markets come back. And they're thinking too, this is just a short-lived recession. We'll be out of this in no time.
Yeah.
When the markets come back, put the money back. Well, that never happened. Those markets didn't come back. So here I am. I built this company, grew way too fast, very unstable. I was undercapitalized, and I was over leveraged. I bought that $60 million worth of real estate at 85% loan to value. When, I tell people today, especially going into the climate we're going into economically here, is you should be 65, 70% LTV on all your loans. And I was way above that. So because of moving money back and forth, I didn't disclose it to my investors. And for non-disclosure, I wound up being charged on wire fraud and mail fraud charges, and I got sentenced to 10 years in federal prison.
Wow.
So in 2013, I went off to prison. And, Luke, I always say that I never flew private. I didn't have a boat. I didn't buy a big car. I didn't have a fancy house. I was the neighborhood baseball coach, home most nights for dinner. And I got ripped from that to live in a 12 by 12 room with 3 men I didn't know, nor did I like. And I wondered what the hell happened in my life.
Yeah, yeah.
So I'm in prison about 3 weeks, and my wife decides that she's going to divorce me and move on. And it just crushed me. And I, walked around every day wondering, how am I going to get through this? How am I going to mitigate my way day to day, much less 10 years of this prison? Well, I was in prison 6 weeks, and as I got one day, I decided to go into the gym. And Luke, this is kind of comical because I was just window shopping. I was just looking around. I'd gone from running marathons to being 35 pounds overweight. I absolutely hated myself.
Yeah.
And I walk in the gym, and this guy walks over to me and he says, "Hey, don't let these people beat you. All they want to do is take from you everything you've ever known. They can take your business, they can take your money, they can destroy your family. But what they can't do is they can't take who you are and what you're made of. They can't take what caused you to go build that $100 million company." And I don't know what it was, but I really believe that everybody has these defining moments in their life. And we have more than one in our lives as we go along. But all of a sudden, the switch flipped for me that day. And I said, okay. He said, "Come to my class, start working out. You'll start losing weight. You'll start to feel better." And I agreed. And I don't know why. To this day, I don't know why. But I agreed. I started going to the gym. I started working out. I started to feel better. And I wound up, as a result of that, I wound up going to college. I got a bachelor's degree in theology.
Yep.
I wrote 2 books. One is Exit Plan, Your Complete Guide to Multifamily Investing and Why You Need an Exit Plan Before You Buy. I wrote a book on property management that we'll publish this year.
Yep.
I wrote an ethics course, and I taught real estate investing, property management, and ethics in prison for 6 years. I was on an outreach program. I went into the community. I told my story 40 times to small business owners and local college students. During that time, I met a professor from the University of Minnesota, and he and I co-authored a paper together that we had published in the Business Journal of Ethics that gets taught today at the collegiate level for forensic accounting and sales and marketing classes. Today I'm back home. I came home in 2020, the week they closed the world down for the pandemic. So I went from one prison into another. Right?
Yeah.
And when I came home, I went into the coaching and training business. And I work with real estate investors, teaching them how to build their business, how to scale their apartment portfolios without making the mistakes I made, right? Success leaves clues, whether it's good or bad. And I recently was approved by the SEC to go back and be an issuer of securities, a sponsor of deals again, so that I could raise capital. Yep. And I'm back in the real estate game. We actually have closed our first real estate deal. I partnered with a couple of my coaching clients, and we went into did our first real estate deal. So in short, that kind of cycles me all the way back to here today.
Yeah. Wow. So you ended up in prison for, was it 8 years? It was the length, about 8 years.
It's under 8 years.
And I don't know. There's so many questions that I want to ask. Like, how do you? I mean, obviously that that's a very long time. So how do you? Where did the? I mean, you gave a little bit of insight into like what helped pull you out a little bit after that 6 week, that period, that conversation with that guy. But surely, like throughout that 8 years, there were times where you felt, you felt kind of trapped in prison, right? How do you kind of keep going through those tough and what kept you motivated? Was it just the fact that you had different projects you were working on, or like what was it that kept you going?
Yeah, so that's a great question. And I think that what I did was, after that experience of walking in the gym that day, and Kirk was his name, and I'll never forget him. He walked up to me, he looked me right in the eye, and he said, "Don't let these people beat you." And it was like at that moment, I realized I had learned all this stuff over the years. I've been involved in coaching for 20 years, had a personal coach that worked with me on a weekly basis for 20 years, right? Different coaches. I've been in training. I've read books. I went to seminars. I mean, I did all the personal development stuff. And I think I think I tapped into all of that as I went through. Plus, my relationship with the Lord really helped pull me through also.
Yeah.
And going to college, I spent 4 years studying scripture and other lessons to, get this degree. But those are the things that I continually tapped into because, hey, you hear stories, but prison isn't fun, and there's crazy things that go on and you kind of have to walk through it. There's no way around it. I mean, I could have laid down, pulled the covers over my head, said I'm finished, and watch TV all day. But I chose to make a difference in my life because I knew I'd be able to come home and make a difference in other people's lives as a result of my experience.
Yeah, well, and so I've got a question for you. So you had obviously a lot of previous life experience, business experience before you went to prison. What specific life and business lessons, where it could be marketing, sales, whatever, but life and business lessons did you learn while you were inside prison?
That you can't let your past define your future. I think the first couple of years I walked around thinking I would never go back in the real estate business. I would never raise capital again. And then I started to realize that if I thought that way, that, my life would just be average or mundane. And that's not the life that I wanted to live, nor did I want my children to see their dad lay down and just give up. Yep. So I wanted to make a difference. I wanted to set an example for others, right? Because I think there's so many guys that I was locked up with that came home and, there's been guys, they've killed themselves and others that, are unmotivated doing nothing. And I wanted to set an example. So I think that one of the biggest lessons I learned was that you can't let your past define your future, that you can build your future. Some of those other life lessons were things that I learned, like from Jim Rohn, success leaves clues, follow other successful people. And if you can believe it, you can achieve it. Great Napoleon Hill quote, right?
Yeah, absolutely. Okay, cool. So let's talk about your real estate business and your coaching that you do. So you mentioned multifamily, multifamily kind of like apartments. Is that correct? So that's like a certain type of real estate investing. Right. So for those that don't understand what that is, do you just want to quickly explain what that is?
Sure. So in the real estate space, there's different asset classes. You have single family, that's single residentials, might be townhouses or condominiums. You also have commercial real estate where you have offices and retail and warehouses and industrial, different products like that. But then you have multifamily. And inside that multifamily bucket, you could have self-storage, you could have mobile homes, you could have RV parks, you could have senior living, there's student housing, there's medical housing. All this falls in this multifamily bucket. But I focus on a class that is, and although all the fundamentals are the same in that bucket, I really focus on a class of workforce housing. This is multiple units in one building, maybe 2 to 4 units, what we consider here in the US on the residential side. I don't know how it's looked at in Australia. And then there's, we buy large apartment complexes, 40, 100, 200 unit facilities where families live in these individual units. So that's what multifamily is. Now, I do coaching on the real estate sales side and from or the real estate investing side. 70% of my business when I was an agent was in real estate, was in investor sales. So I've been in that business for a long time, and I am very familiar with the fundamentals behind it, as well as I am in the multifamily side. So I
Okay.
like multifamily because of the economies of scale. You know,
Yes.
the
Yes.
simplest example I can give, Luke, is if I have one single family house, nobody lives there, and I have to pay a
Mm,
$2,000 a month mortgage payment, it becomes painful every month. But
yeah.
if I have a 10-unit apartment complex and 10% is vacant, I can still pay my mortgage payment.
Yeah. And is there a general, yes, it's a bit more stable and secure for in terms of cash flow. So is there because I know Robert Kiyosaki is big on the multifamily as well. Um, he's like a famous real estate investor. Now, is there like I'm just curious, like, is there like a minimum, is it different for every mortgage and apartment, but is there like generally a minimum amount of people that you want to have in the apartment to know, okay, we're, as you said, 10%, right? So 10% full, sorry, 90% full is a good baseline, or is it kind of vary from apartment to apartment?
Yeah, so the math works like this: about 87% you'll break even and be able to pay your bills. So if you're 87% occupied, you should be able to pay your bills. Anything above 90%, you're making money. So that range between 87 and 90, you're doing a little better than average. But when you're over 90% occupied, you'll generally make money.
Okay, that pays for all of like your mortgage, your gardening, and everything expenses. Is that
Correct.
80% or 7%? Okay,
Correct.
interesting. And um, do you find it? I mean, if you obviously this is the art of the deal, right? Is finding a place where it's going to be pretty full most of the year round. Do you find that it's easy to find tenants if you buy in the right spot, or is it just always up and down in every market?
Yeah, so it's market driven. The business is really market driven. So we look at markets, and I call it the traps. And those traps are things like population growth. I want to be in a market where the population is growing, not
Mm,
declining.
mm,
I want to be in a market where, because population is growing, jobs are growing. If we use Tampa, Florida as a great example,
mm.
you have 1,000 people a week right now that have been moving to Tampa,
Wow.
Florida.
Yeah.
And when you have that inflow of people, what happened? It changed the dynamics of the marketplace.
Yeah.
So now you have to have more jobs, more
Mm,
businesses open, whether it's a nail salon on the corner or the local restaurant where Amazon goes in and builds a distribution plant. You have this business growth, this job growth, which increases medium household income. So you want that household income to be growing. Those are your three top traps that we look at. There's about 7 of them, but those 3 top ones really make a difference, because I know if all of those are positive and
hmm
growing, that I'm going to be able to raise my rents. The whole
Yeah.
objective behind multifamily is that I can take over a property, increase rents either through renovation or better operational excellence.
Okay.
So if I can do those things and increase my operational cash flow so that my investors can earn a passive income as a
Mm,
result of it, and we can sell out as a profit after a period of time, then that's a good opportunity.
absolutely. Now, if because we're coming into some pretty hard economic times, I'm also curious, like, what if there's another, say, crash similar to 2008, where the value of these properties go down? Is this just a case of you guys just? I mean, I guess the good thing about like multifamily apartments is the rent's lower than a lot. It's a lot lower than, say, a regular house, right? So filling these apartments during a downturn is probably not as hard as actually filling like a single, family home, right? So would it be true in saying that it's, in terms of real estate, it's actually a safer investment even in economic downturns?
Yeah, as long as it's bought right. So what I do, I'm considered a sponsor. So I'll partner with my coaching clients, and
Yeah.
we'll go take a deal to market, and we're considered the sponsor or the general partner. And as long as we bought it right and we have a good interest rate and we don't have anything that is going to jeopardize us economically along the way, we'll be in a good position. And there's a lot of people right now, a lot of doomsday experts saying, hey, the market's coming to an end, the world's over, we're going to have this crash. I don't necessarily believe that 100%.
Yeah.
I think that the feds are going to stabilize this a little bit, and then we're going to move forward. But hey, look, when I got in the real estate business, interest rates were double digits.
Yeah.
We're at 6% today. I
Yeah.
mean, that's not that bad. When you compare it to, we've been at 3% or 2.5% for the last few years, but now we're at a more normalized rate, because that was one side of the pendulum that was really out of whack.
Yeah. Okay. Interesting. So with your business at the moment, do you, are you looking just for investors, or do you also coach people on how to invest in multifamily apartments?
Yeah, I coach people on how to invest, whether they want to be an active investor and they want to do all the day-to-day work that goes involved, or whether they want to be a passive investor. I think no matter if you're active or passive, you need to know all the fundamentals and all of the systems that are involved. I actually teach a group coaching where I go through 22 different lessons every week on the different types of the different systems, right? And we start with goal setting, and we work on relationship building. That's one of the keys in this business, is building relationships with people who either want to become your partner, or they want to become your partner as an investor. Then we talk about, everything else, how to locate deals, how to, build an exit plan, how to underwrite deals, how to do the due diligence. So there's all these fundamentals that go into it. And even if you're only going to be a passive investor, you need to understand those things so that you understand the sponsorship team that you're getting involved with.
Yeah.
Because when that sponsor brings a deal out to the market, you want to know that they understand all those fundamentals.
Yeah. Actually, I say the same thing to coaches when it's, because a lot of coaches, especially when they, get going, they just want to hire someone to do like the copywriting or whatever it is in terms of the marketing and sales process. Just do my sales calls for me, just do the marketing, whatever message for me. But it's important for the coach to understand how copywriting works, how putting together a good advertising campaign works, for example, how to run your actual Facebook ads or whatever advertising you're doing, because then when someone comes into your company to eventually take that over, whether it's an agency or just your own employee, what is good and what isn't good, right? An example of that is, so I brought on a salesperson recently, and he also does setting for me as well. Like, so he'll book appointments. But before I brought him on, like, I had to do the setting, like I had to do the outbound calls, like get on the phone and learn the process, so that when I brought him on, I would know whether he's doing a good job or not. And if he's not doing a good job, I know what to do to kind of to coach him up. So it's really important, whether you're, as you said, passive or active investor, that you know the ins and outs, because at the end of the day, it's still, your money. You want to know that money is going towards a project, an investment that's actually going to get your return. The only way you're going to know that is if you know the ins and outs of the investment strategy that you're utilizing.
Yeah, for sure.
Okay, cool. So now, in terms of, because I kind of know the benefits of real estate. I've been just researching it for quite a long time now, but I'd like to hear from you, like, in terms of real estate versus other investments, like stocks, for an example. What do you like about real estate specifically versus other investment strategies?
Yeah, I've always been a real estate guy, Luke. Never really been a big stock guy. I think that, I think people need to have diversification, have some money in maybe
Yep.
index funds, something that'll be a little bit more, stable and not so volatile, and will ride with the markets.
Mm.
But I like real estate because if you looked at a chart, real estate has outpaced the stock market over 30 years, uh, at about 8% a year. So real estate doesn't have as many highs and lows as the stock market does.
Mm.
You're not
Mm.
going to go up 28% one year and down 27% the
Yeah.
next year. If
Yeah.
you graph it, it runs pretty stable in a growth perspective.
Yeah.
So, when I bring a real estate offering to the market, I'm going to make sure that my investors today, going into a little softer market than normal, are going to be able to earn somewhere around 15% a year uh, uh, return on their investment. And part of that is they're going to get a cash flow along the way of somewhere between 6 and 7%, depending on how the cash flow of the property is
Yeah.
after all the bills get paid, right?
Yeah.
So,
Yeah. Okay, cool. And so when with your investors, is there generally, does it depend on the size of the deal with how many people that you bring into a certain property, or is it just like if three people, let's say it's $100 million apartment, that's just throwing out a random number. If each person has $33 million, right? Does it, or do you want a certain amount of people in there generally, or do you like to be diversified? I'm sure you want to be diversified with like the different apartments
yeah.
that you invest in as well, properties around the country.
So one thing I would say is there are $100 million complexes out there.
Yeah.
Right now, our group tends to focus under 20 million, in
Yeah.
that range, right around 20 million, which will give us somewhere between 120 and 200 units, depending on the market,
Yeah.
because it's all price per unit at that point. And then how much are we going to put in for capital improvement?
Okay.
When we bring a deal to the market, we might, there's some security regulations that we need to follow. So if we bring out a 203B, that means that I can bring a non-accredited, less sophisticated investor into that offering.
Mm.
But it has to be somebody that I already know, somebody I have a relationship with. Like I could call you, Luke, and say, hey, because we have this relationship now, you know what I do. And
Mm.
if I brought a new deal to the market, I could call you up. But if I didn't know you, I couldn't just call you cold.
Mm.
So
Mm.
unless I bring to market what's called a 506C or 506C, 506C means I can publicly advertise that, but I can't bring any non-accredited investors into that. I can only bring accredited investors
Okay.
into that offering. So I hope that kind of answers that question for
Does,
you.
yeah. Yeah.
Yeah.
And um as mentioned, I was meeting my dad yesterday. He was at a caravan park, which they're very popular in Australia. And I was looking around the caravan park. I thought this would be an amazing place to own, right? It's probably maybe a couple of miles across. Like it's quite big and just full of holidaying caravans. And there's some permanent residents in the caravan park as well. Actually, I think this one had quite a lot. It was 80% permanent residents, but it's very low maintenance, right? It's just like you would just have to basically mow the lawns. There's no like high rise or anything like that. Make sure the water amenities and the toilets and that are all working and clean, but it'd be quite a low maintenance job. But it'd be like if I was to buy that, right, I'm sure it'd probably be like, I don't know, 50 million. The piece of land is massive and it's in a really great location. I don't even know what the price would be. It'd be a lot of money. So my question is, if someone was wanting to get into like multifamily or like, but yeah, like, kind of like that as an example, do you recommend that they start small, going with like a lot of other investors, like to kind of just dip your toe in initially? Or if you find a really great deal that hits all the fundamentals, kind of go for it? Like what's your recommendation there for someone like just getting into multifamily?
So when I first went into business, and this is a great question, right? I think it's based on the individual.
Mm,
Um, if you think you can go take down a property that size, then go for it, right? I think if you put together a great team and can raise capital to do it, you'll be fine. When I first went into business, I knew absolutely nothing. Here's what I said: I want to go in the apartment business. Let me start looking at apartment buildings. I
mhm.
went out, I put an 11 unit apartment building under contract. And then I realized, oh my gosh, I don't have any money. Now I got to figure out how to buy this thing. I went out and was able to raise, a couple $100,000,
Mhm.
put that on the other portion of it, and was able to buy the building.
Yep.
But I learned because I took action. And I believe a lot of people, they get education, but they don't take action.
Mm,
My goal as a coach is to take those people, to teach them something, give them an assignment, hold them accountable to that assignment so that they grow. If I can help somebody grow their multifamily business or their real estate investing business 20% next year,
mm.
that's what I want to do. So that is kind of a long answer to your short question, but if you think you could take down that $50 million property, then let's put a great team together. Let's go raise capital. Let's
Yep.
take that down. If you think that you feel more comfortable starting out buying a 3 unit or a 4 unit or a 10 unit, then start small. There's been a lot of wealth created in small multifamily properties.
Mm, mm.
It all comes down to the economies of scale and what do you want to accomplish.
Yeah, absolutely. And there are ways to on that. There are ways to protect yourself, right? By creating a like a corporation. So if something does happen, you're protected, and your investors are protected personally from their assets. Is that correct?
Correct. You're invested through an LLC,
Yeah.
uh, limited liability corporation, and everybody is only responsible for their piece, right?
Right. Yeah. Absolutely. Absolutely. Okay. Mike, I just have one more question. It's been a great. I knew this was going to be a great interview. But one more question. So you're standing at the top of a mountain, and there's thousands of coaches below you, and you can only kind of shout one message to help them become more successful. What do you say to them?
Help more people. I think
Thanks.
the message becomes help more people. Because as a coach, when I first started coaching, it was kind of it was a new thing, right? 25 years ago, nobody
Yeah.
was coaching. Now everybody's a coach,
Right.
and I think that I think a lot of people look at coaching as an easy way to make income, and
Mm,
you know, but what we have to focus on as a coach, and I try to focus on this all day long, is how can I help other people grow?
yeah.
I have different systems, different programs, but I want to work within somebody's realm of what they can afford
Mhm.
financially, as well as where they're going to learn, where they're going to best receive knowledge. So I think we need to find where the person needs the most help and help them in that area.
Absolutely. Good advice. Okay, Mike, where can the coaches listening to go to learn more about you and your book, Exit Plan, and the other book as well? Where can they go to learn more about you?
Sure. Thanks, Luke. First of all, you can follow me anywhere on social media, Instagram, Twitter, LinkedIn, my YouTube channel. I have a ton of content on my YouTube channel, plus a couple of podcasts that I do throughout the week, Multifamily Unplugged and Insider Secrets, all directed towards multifamily and helping multifamily investors learn more about the business. You could grab a copy of my book, Exit Plan, for free. You can download it at mycoreintentions.com/free. There's a couple other free ebooks there also. If you're like me, Luke, you like to read and highlight and dog ear the pages, you can buy a book on my website also. And I'm a huge networker. If people want to reach out to me, they can reach me directly at mike@mycoreintentions.com. And I'm open to any conversations.
Awesome. Thanks, Mike. And again, once again, thanks for coming on, sharing your story. I know, as I said, it's an inspirational story of hope. And it's probably one you've told many, many times so far, but I appreciate you going back over that and sharing that with this audience and the coaches listening in. So thank you for that. Thank you for also showing your knowledge and expertise around real estate and multifamily investing. And so, thank you. And for everyone listening, go ahead and so mycoreintentions.com/free is where they get the book. Is that correct?
Yes.
Yep. Great. And I prefer like physical as well. So I'm going to get physical copy. So go to mycoreintentions.com/free to get Mike's book. And if you, as I said at the beginning, if you want to be promoted on the Six Figure Coaches Show, just go to podcast.lukecharlton.com to apply and see the qualifications there, and you can book from there if you do qualify. Once again, Mike, thanks for coming on, and I look forward to continuing our relationship.
Yeah, me too, Luke. Thank you, and thanks for having me.